Hello everyone, my name is Rohit, and today we're going to talk about some interesting facts about the monetary policy of Serbia. So these are the subtopics of my PPT: Introduction to Monetary Policy of Serbia, Instruments of Monetary Policy, Impact of Monetary Policy, Recent Developments in Monetary Policy, Challenges Facing Monetary Policy, and Conclusion. Introduction to Monetary Policy of Serbia. Monetary policy is the process by which the government of Serbia manages the country's money supply. It is an important tool used to influence the economy and is typically implemented by the Central Bank of Serbia. The primary objective of the Central Bank of Serbia is to maintain price stability, which is achieved through the implementation of a variety of tools such as interest rate changes, open market operations, and reserve requirements. Instruments of monetary policy. The Central Bank of Serbia uses a variety of instruments to achieve its objectives. These include open market operations, reserve requirements, and changes to official interest rate. Open market operations refer to the buying and selling of government bonds and the other securities in the open market. Reserve requirements refer to the amount of money banks must keep as reserves in order to meet the central bank's requirements. Changes to the official interest rate refers to the rate at which the central bank lends money to the banks, which affects the cost of borrowing for businesses and individuals. This is the flowchart which depicts the open market operations. As you can see, the open market operation is then followed by reserve, then reference interest rate, then short-term nominal interest rate, and then long-term real interest rate. In the end, it all comes down to aggregate demand. Impact of monetary policy. The Central Bank of Serbia monetary policy has a significant impact on the economy of Serbia. Changes to the interest rate affects the cost of borrowing for businesses and individuals, which can have a direct impact on investment and consumption. Changes to the money supply can also have an effect on the exchange rate, inflation, and the overall economic growth of the country. Recent developments in monetary policy. To achieve price stability, the NBS, that is the National Bank of Serbia, implements the inflation targeting regime. The key policy rate is the main monetary policy instrument in the inflation targeting regime, while other instruments, including the intervention in the forex market, have a supporting role. The key policy rate applied by the NBS, that is National Bank of Serbia, in its open market operations, currently reverse repo rate, repo transactions, that is repo sales of securities with 1 week maturity, represents an operating target for short-term interest rates in the money market. Its role as the operating target is supported by the corridor of interest rates on deposits and lending facilities and by the by other open market operations. Other monetary policies instruments have a supporting role. They contribute to the smooth transmission of the key policy rate to the market as well as the development of financial markets. Challenges facing monetary policy. The Central Bank of Serbia faces a number of challenges in implementing its monetary policy. These include the need to balance the objectives of price stability and economic growth, as well as the need to maintain financial stability. The central bank also faces the challenge of ensuring that its policies are effective in the face of global economic development, such as the current low interest rate environment. Conclusion. The Central Bank of Serbia has implemented a number of measures to support the economy and ensure price stability. These measures have had a positive impact on the economy and have helped to maintain financial stability. However, the central bank faces a number of challenges in implementing its monetary policy and must continue to monitor global economic developments in order to ensure that its policies are effective. Thank you.